In this presentation, we will be entering a bank reconciliation for the second month of operations. We've entered data for the first and second month of operations. We've done the reconciliation for the first month, and we'll now be able to compare and contrast in a back-to-back format the pros and cons, the problems and easy parts of entering the first month and the second month bank reconciliation. Problem with the first month often being the beginning balance being a challenge. And in the second month, we now are going to be looking at those outstanding items that were outstanding in the first month, which will now be clearing in the second month. We'll be entering this into QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and the Open Windows list. We're now going to be doing a bank reconciliation. Let's first take a look at the cash account because that's what we're going to be reconciling. To do that, we're going to go to the banking or reports dropdown. We're going to go to the company and financial. We're going to go to our favorite report, that report being the balance sheet standard. Within the balance sheet standard report, we're going to customize the report in the upper left, changing the dates from 01/01/20 to 02/29/20, 02/29/20, January through February 2020. We're going to select OK. Here is our information. We have the checking account as of the reconciliation date, the end of the second month, at $99,238.93. That then is going to be reconciled to what we have on the bank statement, $99,296.09. Now, note that you might think, hey, those two amounts are pretty close. Maybe I don't need, maybe the reconciliation, I don't need to do it because they're pretty close already. And so I'm good to go. But note that that difference could be made up of multiple different things. There could be like 10 checks in there and like 2 deposits that make up that small difference that kind of match each other out. And that's a lot of data input that's not in the system. Therefore, in order to reconcile, in order for us to have assurance that everything we've entered into the system is correct, we need to reconcile down to basically the dollar or penny, which seems picky, but in this situation, you kind of have to do that. And it should be easy to do because we're just checking everything off. Because if you do that exactly, if you know exactly what the difference is, the checks and the deposits that make up that difference, then you can not only be assured about the outstanding items, but have assurance or more assurance about the items that have been input into the system. So we know that these two amounts aren't going to match. Usually we expect them not to match because of those outstanding items that we have written in our system that we know of that are timing differences and therefore have not cleared the bank as of this point in time. If we go back to the bank statement, we see that we have the beginning balance here, which is going to be the same as the ending balance for January. So here's the ending balance for January, beginning balance now for February. The beginning balance will not be a problem for us anymore within the QuickBooks system after the first month, because it'll roll forward smoothly. So if you have, usually that's the kind of thing that stops most people or causes many problems. They can't get the beginning balance reconciled, and therefore they have no starting point. Once you have that starting point established, the bank reconciliation should be then much easier as you move forward. So we have the beginning balance here. Now the thing that we're going to have to deal with, obviously we have the increases and decreases, same as the last year, and then this is the ending balance. The thing we will see in the ending balance here, in the bank statements this month, is the cleared or the uncleared items last time, the checks and the deposits that had not been cleared, which will clear this time. In other words, some of these checks that are clearing here are going to be from things that we wrote in January. So we wrote the check in January. They're now going to be clearing the bank in February. Why? Because the bank didn't know about them until someone cashed them into the bank, and therefore they will be cleared at the point in time they cashed into the bank. The bank knows about them, not the point in time we wrote the check. So that's going to be kind of the new thing here. Back to the QuickBooks system, we're going to then go to our reconciliation, go into the banking dropdown. We're going to go to the reconcile item, banking, and then reconcile. We're going to be reconciling the checking account. The beginning balance should match out, should tie out now. If it doesn't, then you got to think about how you're going to basically adjust that. But you shouldn't have a problem after you fix it one time, because then it'll roll forward properly every time, because now we're going to enter the ending balance directly here, the ending balance being the $99,269.09. And then, of course, once done, it will then it'll roll forward to the beginning balance of next time. So it has to work. So 99,296.09. Did I type that in right? 99296.0. Yes. Now we're not going to be entering the service charges and interest here. As I stated in the last presentation, I like to enter that into the system because it's less confusing for me when I actually get to check it off to tell me if I'm reconciling or not. If there's a problem, I want to know if those are included or not in the balance. It's less confusing for me to manually include them in the register as needed. So I will not be using these fields here. I'll go into the check register and enter them as needed. So we're going to say continue. Here is our information. We have the period of the second month, February 29th. Once again, we can hide transactions after the month of February, but we don't have any. So we shouldn't have any. I don't think we have any here, right? Because we have only entered through February. And then we have the highlight the mark. So we already have it highlighted. I like it to be highlighted there. We could try to say, hey, I need this number to go down to 0. What if I just marked them all off? Would it work? And we could check them all off and say, nah, we're still off by 180. Didn't work. Okay, darn it. We're gonna have to do the whole thing. So I'm gonna unmark it then. And then we're going to have to check them off. This is our beginning balance. And the major things we want to look at here is the cleared balance. So here's our beginning balance. Here's the cleared balance. That's going to be the balance here on the bank statement. And then we're going to get our, here's the ending balance on the bank statement. We need to get our cleared balance, which is the beginning balance, plus everything we check off to match the cleared balance, which is the balance on the bank statement, to be able to reconcile indicated by the difference then going to 0. So to do that, we're going to check everything off one by one. You'll recall that we expect then for everything on the bank statement to be found on the QuickBooks books. We do not expect everything on the QuickBooks books to be found on the bank statement due to outstanding items. If there's something on the bank statement that is not on the QuickBooks books, it is either an error on the bank's side, or it's something that we need to add. Probably, almost always, something that we need to add in our system. So that's what we will do as we do that. Therefore, you want to be checking off from the bank statement to the books, not the other way around. So the first thing we can check off, the beginning balance checked off, so we're good to go there. That's nice. Now let's do the deposits because they're probably easier. Remember, the date is not going to help us much. And also note that the deposits, because we used undeposited funds properly, will then be grouped in the same format on the bank statement as the QuickBooks system. If your deposits aren't grouped properly, then consider how you can do so with the use of the undeposited funds to make the reconciliation process as easy as possible. You don't want to, especially if you have a lot of deposits, you do not want to be able to, especially if they're going to be like credit card deposits, which are a bunch of little numbers, right? You don't want to have to be adding them all up to see how they match out. So think of a system, try to figure out, talk to the bank if you have to, if it's a credit card thing, ask how they're sorting things and how you can get your system to line up properly with that. Okay, so we're going to say that we have the 955 and there's the 955. Notice that was written or deposited in January. Now it's being cleared in February, so that's fine. It's still part of the cleared balance, even though it's on our bank, it's in our books as of January. It hasn't cleared and is part of the cleared balance for our reconciliation in February. All right, and so we're going to check that off or highlight that off, highlighter. I'm going to highlight it off, bam. And then we're on the 12,250. Here's the 12,250, checking that off here, highlighting that off there. Here and there. And then we have the 825, there's the 825, checking that off here, highlighting it off here, or highlighting it green here. And then we have the checks. Now the checks, you'll recall the date isn't going to help us a whole lot because the check could be entered or deposited sometime after the date. The check number, however, will be useful as well as the amount. If you don't have check numbers because they're electronic deposits or something like that, then you're going to have to go by the amount. The date will be somewhat closer if they're an electronic type deposit, so that will be useful. You might have useful vendor information that would be provided in the bank system in that case as well. If you have any questions about these, obviously you can oftentimes go to the online check-in and then verify the checks in that format. Go get more detail from the bank by going into the online check-in, even though you're taking this information from the bank statement. Okay, so here's the 11,000, check 106. So notice it was written in January, it's clearing in February, therefore it went into our books on the balance sheet in January. It's going to be part of the bank reconciliation process as cleared in February. So we're going to check that off. We're going to say that one is done and highlight that one off. Then we have check 107, 500. There's the 500, 107, also something that was outstanding in January, now clearing in February. Closing that out or highlighting that off. Then we have the 1009, it's going to be the 360, 1009, checking that off and highlighting it on this side. Then we have 1011, 353933, 353933, 1011, looks good. We're going to go ahead and highlight that one. Highlighting that one as being cleared. Then we have the 1012 and 630. So here's going to be the 630 and the 1012. We'll highlight that one. So we'll select that and highlight it. Then we have the 1013 and the 1359. So we have the 1013, the 1359, checking them off, highlighting this one. And then we have the 15, the 1015 and the 168, 1015, 168. You'll see how basically straightforward. This isn't too tough to do, although it's tedious to do. Even if you have a whole lot of these, it's not that bad. So we're going to check this one off. And also note, this isn't just because it's a book problem. It has to work because we've entered these into the system. So it has to be basically timed out. Okay, 1014, 1359. So we've got 1014, 1359. Not that one, this one. And we'll check that one off and highlight it on this side. Then we've got the 1016 at the 123.37. So 123.37, I don't see it here. So actually here it is down below, and notice there's a date problem. There's a date problem. You would think that would be in February. It cleared in February. So that's another thing we can kind of catch as we go. I'm going to keep pushing forward with this, and then we'll go back to that item. So I'm going to skip that one for now, and we're going to go to the 830 at the 1020. So we got the 1020, 830. We're going to highlight that one. So the 830. Selecting that and OK. And then the next one, we're going to be picking up the 1021, 648. So here's the 648, 1021. We're going to go back over and highlight that one. And then we have the 1024. We're going to skip down here at the 351271. That's going to be this one. So then I'm going to go ahead and adjust the date for this one. It should be around 228, which would make sense. If I look at that one, it's going to be for the sales tax. And so you would make it for sometime in February to process the sales tax. So I'm going to go back over. I'm going to scroll down. I'm going to double click on this one. And then we're going to see that we have the check date here at 9/28, and it should be 2/28. So we're going to say make this a 2, and then say save and close. So I'm going to save and close that and say yes. And notice again, this is something that you can change in QuickBooks and other softwares. It might not be as easy to adjust, but note, and you want to be careful with making those type of adjustments as well. So now I'm going to say that makes sense now. It's at 228. I'm going to check off that one, scroll back over here and highlight this one. So now we have these two items down once again, the 100 and the 20. If I go back into QuickBooks, that's what we're off by, the 120. We're going to add those two items. Once again, we have a withdrawal of 100. Now we're going to take the other stance. We're going to say that we talked to the client, and the client said that it's actually a withdrawal for personal use as opposed to something for business-related use. So therefore, instead of putting it into miscellaneous, we're going to put it into a draws account. So we're going to go back over and we're going to say, and this is common if something happens and you write a check. Let's say if you went to a restaurant and you spent money out of the business account for personal reasons, well then you can write it to a draw, right? You can write that amount to a draw rather than an expense account. So in this case, they took money out, and we'll just say that that's going to be a draw as opposed to an expense account. They're taking money out of the business as a draw, will not affect the income statement, not bringing down net income, but rather just coming straight out of the equity section. So to do that, we're going to go to the banking up top, use register, and then we're going to enter in the register as of 01/31/20. I'm going to put other here. we had a payment of 100. Now, last time we put this into miscellaneous. This time we're going to put it into a draw. The difference is it will not be an expense, but equity account. You'll see that we have the draws account given to us already by the QuickBooks system. The draws is basically a contra equity account. It represents the equity going down. It's going to be a debit as opposed to a credit balance, and we'll be able to track then the money that came out of the business by looking at the draws. The idea being the company makes money, the money accumulates, rolls into the equity, which will be owner's equity, and then we, the owner, take the money out in the form of draws. The form of draws then can be calculated or tracked within a separate account, the amount that we take out in the format of the draws. So we're going to say draws, and that's going to be that one. So we'll say enter. If we go back to the reconciliation, we then see the draws should be appearing here at the 100. Here it is up top. I expected it to be down further there. Okay. And then we're going to say that we had the other side of it is going to be the bank service charges of the $20. We'll enter that as well. Going to go back over to our checking account that's in the open windows. We're going to enter the bank service charges. I'm not going to add a check number. It's going to be a 15, was it? Or $20. So we'll say it's $20, and it's going to go to bank service charges. So we'll enter that. Back to the reconciliation, and then we should have the $20 here. So we'll check that off, and that'll bring us back down to 0. So I'm going to check that off. That brings us back down to 0. Now, once again, everything on the bank statement then we have found on the books in QuickBooks, including the beginning balance and the detail, which is broken out down below, leaving us with the ending balance. However, everything on QuickBooks we did not find. Everything on QuickBooks that was even written in February we did not find on the bank statement. And that's fine because these items are going to be the outstanding items. When we actually create the bank reconciliation, QuickBooks will say, hey, here's the book balance at the 98,995, and then here's the reconciled balance at the 99,296. That's the amount on the bank statement. The difference is going to be related to these 4 outstanding checks and this outstanding deposit. What is going to happen with those? Can we check on those? Are those okay? How can we check with them? We can then go to the bank statement or to the bank, look at the register as of February to see if these checks and deposit had cleared in February. If they had, then there's simply an outstanding item as of the end of February. We could check them in March to see if they cleared in March. And if they had, that's what we would expect, then we're okay. It's just a timing difference. We know exactly what the timing difference is. As long as we know what it is, then we can be assured that the cash is good to go. So we're going to go ahead and reconcile this item. So we're going to get our 2 reports, both the summary and the detailed reports. If I say display, then we first get the summary report. You'll recall that we have the cleared transactions up top, as we had last month at this time 99,296. That is going to be the amount as the ending balance on the bank statement. Then we have the activity, and this is really the bank statement, the bank reconciliation. This amount, then the activity, the outstanding checks, of which there are 5, and then the deposits, which are 1. This is the ending balance, then the amount that's going to be on the books. If I go to the balance sheet, we see that 98,995 is here. Back to the reconciliation report. Now, if there were more transactions after the date, it would show them down below after February, the date of the bank reconciliation, which again is information we don't really need. We don't have any in this case because we haven't entered any data. Therefore, this is a little bit cleaner of a report. Let's go ahead and print this out or save it. I'm going to go ahead and print it with the Qt PDF printer. I'm going to print the report, and it's going to give us our little printer item here, and I'm just going to call this the bank reconciliation summary for February, and we'll save that. And now this report, you really want the detailed report because this is not giving the detail of what we really want, which is exactly what those 5 checks are. The detailed report is overwhelming looking because it adds a lot of information we don't need so much, but it does have those check numbers, which we do need. So now we have the cleared items up top, which again, we don't really need that much. We really are starting right here. Here's the cleared balance, the 99,296. That's the amount that's going to be on the bank statement again. So that's this amount. And then we have the uncleared items, which are now listed out. Here are those 5 checks. We want to know what they are, the check numbers, because we want to be able to verify them if we need to by checking what happened in February to see if they did indeed clear in February. The same with this deposit. Those being the reconciling items to get us to the ending balance of the $98,995.56, which is the amount on the balance sheet. If we go back to the open windows, the $98,995.56. Back to the reconciliation. Let's go ahead and print this one out. I'm going to go to the printing. I'm going to print the report with the Qt PDF printer and print. And then we'll see where we want to put this. I like to put this right below the title there, and so I can see it and have less likelihood that I'll spell it wrong, but I make no guarantees. It's going to be the bank reconciliation detail for February. We're going to go ahead and save that. And there's the February reconciliation.